Yo, what's going on? No problem, Ben. What's going on, Jonathan? Get started here in a few minutes. 7:58. 2 minutes we'll give it. Go through some charts. Tom Brady out of retirement. What's everyone's thoughts? We got Tom Brady in the chat. What is everyone's thoughts? Can't believe he's coming back. How was everyone's weekend? Yes, sir. Hit the like button. Yeah, I can't believe he's back. So cool. You think he wants to go to the 49ers? I don't think so. He just moved to Tampa, so I can't see that happening, but just expect the unexpected. That'd be pretty crazy. Quad witching is like when funds rebalance their portfolios and all the options expire. It's very volatile, depending on how you say it. The end of the day is this week quad witching? Honestly, don't remember. Let's see. Quad witching. Oh yeah, March 18th. Yeah, it's when 4 different sets of future and options expire on the same day, so things definitely get pretty crazy towards the end of the day on Friday. You'll see it gets super choppy. Yeah, so stock index options expire, options on stock index futures, single stock options, and stock index futures contracts all expire on 3/18. So there's definitely going to be some significant volume and volatility. Like for example, quad witching day on March 19th of 2021, the S&P 500 saw the most volume of all year on that day. So ton of volume, ton of wicks to the upside and to the downside when there are buys and sells. So should be pretty interesting. Definitely a good idea if you're not experienced to sit in the sidelines and just watch from the sidelines. Yeah, and VIX expires Wednesday. It's definitely good to start the challenge account on that day though, because if we're on the right side of things, I mean, we can easily get a 2,000% play pretty easily. Just things are gonna go crazy. All right, what kind of questions do you guys have? This is gonna be a little bit of a shorter stream, probably 45 minutes. I am moving tomorrow to a new place, so I need to pack up my computer. I do use Fibonacci retracements. I don't like to show them on the chart though, because I like it to be clean, simple. But I would just go from like the low to the high. And ideally I'm looking for like the 618 or the 382, right? In between that level. And as you can see, the first bounce hopped right off of the this one right here, actually, because I'm going to this this high. So this candle bounced right up the 382. And you could just play fibs, like it's a pretty good strategy, right? So if the 382 breaks, you could take puts, and then the next level of support would be the 0.5. If that breaks, the next level of support is the 618. If that breaks, the next level is 786. Right, and it bounced right at the 786, came back up, rejected the 382, which is originally where it bounced as the support. So this would have been a great spot to take puts, right? So the 382 acted as a support, and then it came back up, acted as a resistance. So that always happens. So that's how you would do, make the music lower a little bit. That's how you would use fibs. Or you could just use price action. EPOCs, nope, never use it. Bullish on Tesla. I mean, I'm just gonna play the levels. So the level I have here is 782.17, which is this low. So if this breaks, you might see some big downside below. So that's just the level I'm watching. And then if we break over this high here, right, 843, we should see a move up higher and potential break of this trend line. So just need to see what happens at open. We also have a lot of news coming out this week with Powell speaking, quad witching Friday. So it's going to be a pretty choppy week in my opinion, but that is just a prediction. I have no idea. No one has any idea what's going to happen, so we just continue to play as it comes, but always make a plan. But based off SPY and QQQ, right, so we're in an overall downtrend, right? We're making lower and lower highs, and we're making lower lows too. So if we zoom in on the smaller time frame, we were consolidating, right? We were moving to this to the side, making higher lows and lower highs. Then we broke to the downside. And then at close, we close lower than 420.45, which is this low here. So that's not very good. That's definitely pretty bearish. Right, since we close below, it looks like we might get a move right into this region right here, around 415, which we bounced once before. We bounced again here. And then if this level doesn't hold, this is the next level of support, 410. What would be ideal is to get to the 390 level. Right around here. This is a wild candle. We only have 30 people here today. I guess everyone is tired from daylight savings. So chart's not looking too good intraday. Same with QQQ, right? SPY and QQQ kind of moves together. Right, higher lows, lower highs. We broke out to the downside. We had that little fake out. This is where I tried to play QQQ calls. Right, we had like 20%, and then they came back down and never reclaimed. So we got faked out big time. But it happens. You can't always win. So come back this week stronger. So same thing here, same thing as QQQ, right? We had this low here, it kind of bounced. People probably, you know, started to buy calls here. Looked like we were going to get a bounce back to the upside, and then it came back down, broke that level of support, right? Double bottom, and now it's testing this next level, right? This candle here. Then it's probably going to come down if it breaks that level to around 320. So those are the levels I'm watching this week. But if it breaks 329, I would consider calls. Any questions you guys got? Let's get active in the chat. Drop a like on the video. Everyone always makes comments on my voice. I did karaoke this weekend. I do have a good voice for country music, even though I hate country music. But I do have a very deep voice. And I sang a country song. Karaoke. And boy, did I get the crowd moving. How do I trade gap up and gap downs? So I always have a plan before the market starts. All right, make a plan and play your levels. If the market gaps up and it invalidates a setup, there's nothing you can do, right? You just sit on the sidelines and wait for the next setup. You never need to rush into a play, right? There's always going to be a new opportunity, and there's always going to be another day. So if you don't feel comfortable taking the setup, right? If it invalidates your plan, or if your levels get triggered in pre-market or something, you know, just avoid it. You don't need to take every play. Patience is a trader's best friend. Smaller time frames creating filler wedges, slightly. It was Zamora. It was Your Man by Josh Turner. That's so funny that you guessed it. IWM, right? Kind of the same thing as SPY QQQ. Right, we're creating lower highs and higher lows. And we just broke that low, but we did close right at this level, so we could bounce and move to the upside. But there's a lot of events going on this week, so we really just need to wait till market open to see what happens. All those tickers that you guys are asking to see, I will cover. Exactly, Jay. That's exactly what happened. My chair just squeaked. What is the reason behind the call alerts and BullTrades when the trend is downward? It's all about risk to reward. Exactly. So Alpha, we took the only reason I took calls is because I like the risk to reward better, right? It doesn't really matter if you're in a down market, like a bear trend versus a bull trend. If the setup has a good risk to reward, I'm always going to take it. All right, like what did I trade last week? I forgot. Let me pull up the Discord, and maybe I can go over why that went wrong. Let me pull up my plays that I took. Okay, so Amazon I traded last week. Oh, I know exactly why I took this one. My lines are just the color really doesn't matter. I usually use red for puts. My white lines are usually just support and resistance, and the yellow lines are like top price targets, but I don't really always change them. Okay, so last week I called out Amazon. I bought it on the 10th, so I bought it right here. Okay, so this is what I was looking at. Let me get my levels lined up here. Okay, so this is exactly what I was looking at here. Is this music too loud? Let me know if the music's too loud or not. Okay, so this is exactly what I was looking at, right? So we had one bounce here, another bounce, and then it turned into a resistance, right? Another bounce here, and it kind of bounced here as well. So this 29.75 level was pretty major, right? This is an important level of resistance. So, right, we gapped up on this day, and then we flagged, right? We created a nice little flag. And then we broke out to the upside before touching this level of resistance again, right? So I was considering taking calls here because I wanted to play the breakout, but it ended up rejecting twice. So if we go into the smaller time frame here, I'm actually gonna use the replay tool. All right, so this is what I was looking at. So what I wanted, right, I had this little triangle planned out here. It faked out to the downside. So once it bounced, right, so this is what I was watching. I was hoping that, right, it would come down, take out everyone's stop losses, and bounce in this region, right? So this double top here of this previous flag is going to act as a new support. So double top, old resistance, was looking for it to turn into a new support, right? So if we click play, let me slow this down. Okay, so that was actually the close of the market. So my apologies. I definitely screwed that up. Let me go back. Totally forgot that that was the close of the market. This is what I don't get for preparing. Okay. So this is the close of the market. My apologies. Let's go back. Right, so at the end of the day, all stop losses are taken out probably. Right, dips right into the zone, and then market closes, right? And then the next day, we took calls right at the open of the market. So let me see the exact timestamp I took. Give me 1 second. If I could see the timestamp, I can't see what time I alerted it. Let me go to options alerts. Give me 1 second. Okay. I can't see the timestamp. All right, whatever. It's annoying. It is what it is. But what I wanted was to play this break here. So let me fast forward this. Oh, I think I took the retest actually. Okay, so I probably took the retest, right? Around 9:30, 9:40. So it came back down, right? This old level of resistance acted as a new support. We probably entered right around this region. And then I wanted a move and a break here. Right, we had like a 20%, which was probably this candle right here. And then it ended up coming back down and failing. Yeah. So why did this go wrong and where we should have taken profits? So we played the retest, right? So old resistance acted as a new support, came back to the upside and rejected this level perfectly once again. So once this came down, this would have been a good region to take profits or you cut your position. It came back down, held support one more time, and then created a lower high. Right, so this is the signal here. Low volume, almost no volume at all. This would have been a great spot to take profits. And then it came back down, bounced one more time before dipping again into that same zone. let's see what happened. Right, create a little double bottom right there. This is on the 1 minute too, so just be aware. I'm just doing it for video purposes. I don't remember what happened here. But this is that old resistance acting as a new support. So it's starting to create a base here, right? Right, so it comes below. Let's see what happens. Probably triggered some people's stop losses, moved a little to the upside, right? It's just moving sideways and chopping. This is what you want to avoid in the market. Almost no volume at all. Right, so it's slowly pushing back up. But everyone probably exited their position on this downside move and the chop. And look, it rejected it again. So this is all just because of this resistance and the previous levels over here. See what happens. Keep watching. Okay, so here it's creating a little bear flag, right? It's consolidating and it's pinching, right, on the same trend line still. And then it breaks to the downside. So look how that worked out perfectly right here. So this would have been a great spot to take puts, right? You take puts here at this level right here, right? When a stop loss would be at the high of the triangle right here. Whoops. Right, stop loss there and price target in this region. And it hit it perfectly. Bounces back up, probably comes back down. So look at that. So this is a great example of how once it breaks to the downside, it triggers right near the target and then it bounces back up, retests. So then now this old level of support acted as a new resistance. This is like perfect textbook play. Even though this is on the 1 minute, so you got to be quick. This is like good for scalping. See if it breaks through. So it tested that level again, right? The breakdown level. And it's creating another triangle. Make this go a little quicker. So now it's just moving sideways. Like, you definitely need to avoid this. But notice how it's just staying in this region, right? It's just chopping sideways above this previous resistance and below this. And then it breaks below. And then look how it tested this region again. Why don't I use extended hours? There's no point. It's no volume and it's before market open, so you don't need to use it. But that's exactly how I traded Amazon. And we took a loss on it. It happens. Let's see. So Tesla. Let's cover Tesla. So common level of resistance. Bullish over 843. Bearish below 782. Shopify I kind of like this week. If this doesn't gap down, right, common level of resistance, broke out over it, and now we're flagging right above. Right, my entry point would be right in this region. Needs to hold this level, definitely. AMD, right, kind of creating like a falling wedge. This is a very, very big falling wedge. Alpha, could you please explain why calls at the breakout have a better risk to reward than I? So when the market's trending down, right, calls are definitely cheaper than puts. So you're getting in for a cheaper price versus puts. And if it does spike up to the upside, implied volatility is going to be on your side, and it's going to increase the premium of the contracts. So if you get in before the move happens, it is riskier, but there's room for bigger profits. So the market's trending down. Playing calls on a pop up to the upside is definitely very nice. It pays very well. And same in a bull market, right? If you're playing puts in a bull market, premiums are going to be cheaper, and if there is a big sell-off randomly, there is going to be a nice implied volatility spike in the premium, which is why the risk to reward is generally better playing the opposite side. Good question. Would you consider that inverse head and shoulders on Tesla? Let's see. This, yeah, it definitely could be, right? Left shoulder, head, and the right shoulder. For it to be, see where it is on the fibs. Right around the 0.5. All right, so ideally it needs to hold this 0.5. Bounced off of it once. If it can hold it again, that would be great. If not, it's going to test this level, 782, and it's going to move down to the next fib level, 618, which is around 772. So shop looks good. AMD, right? Everything is trending down, so just be aware of that. But I would take calls if this level breaks, like right around this region. And a lot of people don't understand why we take calls. The market's trending down, everyone gets mad. But when it works out, it pays very nice. Which is why all analysts usually take calls at the potential break. Right? We size correctly. If we lose, it doesn't matter. We have a plan before we enter the trade. We know what we're risking. We're willing to lose whatever we put on the table. Right? And when people start getting angry because an alert goes south, right, it's because they sized way too big and they lose too much of their account. Not our fault. My charts are always like this. I try and make it as clean as possible. I remove all distractions. Ricardo, you can put your trend line on any time frame you like. Whatever you want to trade. I usually chart on the 1 hour. I like to look at, you know, the previous month of data, right? So this is like the last month, right? So it's March 11th. Here's February 11th, and then here's like the end of January. So we're seeing the last month of price action. Because I just day trade, so I don't really need to see the full thing, right? It's good to like, excuse me, almost like the hiccups. Chart like the major levels, like right here, right? Old resistance turned into a new support, acted as a support here, and then bounced one more time. So this 99, 100 level is major. That 100 level breaks, that won't be good. But you can chart on the smaller time frame if you're day trading. And this is what I'm watching on AMD. Amazon kind of similar, so we just kind of went over this. I'm on level of resistance, that's the fake out that we tried to play. And it moved to the downside. All right, if we do have a gap to fill here, so under 28.79, things can get pretty ugly. We have a pretty big gap. Nvidia, right, same thing as AMD basically. This level breaks 218.82, we'll probably test 208. All right, we bounced 3 times here now. But definitely watching this level here. Facebook, I was watching this last week, but it didn't play out. Right, we have lower and lower highs. We had these higher lows. We broke out to the downside. We retested that BullTrades cloud. And now we're moving back to the downside. So watching this 186 level for a potential bounce here. Apple kind of, you know, everything is very similar this week. Right, common level of resistance, and we're kind of, you know, flagging here, watching for a break of 156.79, this level right here. Need to hold this level here. Good question. How do you decide to hold till 1000% profit? What points do you consider to not sell and get out at 100%? So anytime we have a position go to 1000%, it's never a full position. It's always just a runner, right? That's a common misconception. So if I buy 50 contracts or something, I'm never holding all 50 to 1000%. Never, ever, ever, ever. I always scale out as the move goes in my favor, right? So I'll scale out some contracts at 20%, some at 50%, maybe some at definitely some at 100%. Always make it risk free, depending on the type of trade. And I scale out at levels of resistance. So if we break one level, I would take some profits on the move to the upside. Right, always scale out when IV is in your favor. So when the position's moving to the upside, you always want to scale out as it moves to the upside, right? Because if you start to sell when the position goes down, you're not going to get good fills. Right, that's always how good traders get good fills. They scale out when the implied volatility is in their favor and people are slapping the ass. Yeah, as a newer trader, that's a good idea. You could definitely stick to a few stocks. A lot of people just trade like SPY, QQQ, and IWM. You could definitely stick with just those. The premiums are pretty cheap. So it's definitely beginner friendly, or small account friendly, I should say. So definitely, you know, just trading the main names like SPY, QQQ, IWM. Tesla, Amazon are pretty expensive, so it's definitely not small account friendly. But just trading like the SPY, QQQ, and IWM are pretty good ideas. What do you say sizing correctly? I use about, depending on the trade, about 1 to 5%. Never more than that. Probably 1 to 3%, honestly. 5% if I'm very confident. But with the 5% trade, I'll have a tighter stop loss. Because I have a certain amount that I'm willing to risk, and any more than that I don't want to risk or lose. So I'm always using 1 to 3%, I would say. All lottos that I take on Fridays are like 0.5%. No problem at all. I do like Chipotle this week, actually. Setup looks very good. Right, clean breakout and a retest this week. Also, look at this yellow line here. Right, bounced multiple times, rejected twice here, then bounced again a few more times. So if this 1467 level can hold, this might look very, very good. I'm going to set an alert right here and right here, right below it. See what happens. In a 5% play, I would scale in. And by scaling in, I would first, right, so for example, I'll use this as an example. Right, so here's Chipotle. Turn this off. So first, I see this consolidation. I would take a position right around here, right? Half of my size that I'm willing to risk, right? Take half here with a stop loss below, like right below all these bounces, right? Stop loss in this region. And then at the break of this point here, right, is when I would scale in. And then my price target would be right this candle right here, the first area of resistance, this region right here. So for example, right, buy in here, scale in at the break, and then by the time it's at this next level, I would scale out around this region, and then I have some runners, they go, and then right, it ended up confirming that old resistance as a new support right here, and then you could have scaled out at this resistance again. Right, but look where it rejected. Right, so we tested this level, went right through, and then we tested this level and we've rejected. So it rejected, came back down, used this old level as a resistance as a new support, went back up and rejected again. So a very textbook play, happens every single time. When an alert trigger is hit, what is the first step? First thing I do is, right, I'm always looking at the flow dashboard. Always looking at this and waiting for the name that I'm looking at to come up. All right, that's the first thing. Then I enter. That's really it. I look at flow and I look at the levels of resistance and support. That's all I look at. You don't need to overthink it. Make it easier than it is. Don't trade futures. Everything just looks kind of ugly. All right, it needs to break above this level, or up right above 50. Right, old support turned into a new resistance, rejected multiple times across the board. Needs 50. How would I play the retest? So, right, here's this level here, or tested the high right there. Right, so breaks up. If you're day trading, you can use like the 5-minute for the BT cloud. Right, breaks up, comes back down, holds the clouds and the resistance. Right, so the next thing I would do is you can take the entry of that previous candle. Right, so you take the candle, you enter here, and then you scale out right at the high. Right, so this would be a scalp, and then once it starts consolidating, moving sideways, and then breaks below this wick here, right, clouds turn red, great area to exit out. But obviously the best position to enter would have been here at the break of that resistance. Right, multiple rejections, and then it broke out, cloud started to expand, and you can exit right at the cloud flip. Some sort of, yeah, I always filter my dashboard to over around $70,000 to $100,000 worth of trades. These I'm not even looking at. I just never deleted them. And that's really all I have on my watch list, from Chipotle to SPY. These names here. The blue tickers. Oh, how would I play it on? So 1467 holds, right? You can take calls. Definitely take calls at the bottom here. And then if it breaks below, right, you take the stop, cut your position. Or you can enter back again through 1491 or 1500. 1500 is a psychological level, definitely a good spot to enter. And then add contracts as it moves to the upside up here. How do you make it so you see all the gaps? I use these candles. It's called candles. And turn off aftermarket hours. Right, here's extended. And here's regular. I never use extended hours. All right, I'm gonna be here for like 2 more minutes, guys. I gotta pack up my computer. How do you deal with constantly hitting stop losses? You gotta be, so before you enter the trade, you gotta expect it to go to 0. That's really the only way we're dealing with it. Expect the trade to go to 0 and you'll have no emotion tied to it. Right? Just play the chart, look for the best trades. And if you have a plan going to the trade, you'll never use emotions. I don't even know what orb is, Brady, honestly. FCEL. Yeah, no shot. This is ridiculous. It's like a small cap news play. Would never play this. It's a fire beat. You guys like this beat? ORCL. When I say I would never play something, it's just my opinion, by the way. Right? So all this is my opinion. Doesn't mean you guys can't play it. It's just if there isn't a setup that I like, I'm not gonna trade it. Right? I don't need to force trades. I want the market to come to me. I think that, yeah, they just had earnings. Nothing special here either, right? For me personally, I don't see anything special here. Actually, that looks pretty good, but it did reject this level. If it closed over 7904, which is this resistance, this old support, that would have been nice. I'll set my alert here. One question would be, guys, you put a lot of effort in bull trades. You could just retire in Hawaii. I don't want to retire. I like trading. I love trading. Why? I mean, I don't find this work. I don't find this as work. I do it for fun and I like helping people. I've helped hundreds of people make money and become a better trader. That's definitely more rewarding than anything else. And also, all these people charge way too much for what they offer. Right? Like, all these sub-services charge $150, $200, $300 just for alerts. That's ridiculous. Ridiculous. We charge 50 bucks, so beginner friendly. We offer more education than anyone else. Well, the biggest thing personally is when I used to be part of these groups like 10 years ago. The people running the group wouldn't even talk to their members. It would just post alerts and that's it, right? They don't answer questions in the middle of the day. They don't do any of that. We talk to our members 24/7. Like literally 24/7. If someone asks a question in technical chat, we answer it. And then we also have our own unusual options activity platform, which no other service does that, right? We created our own platform. We're looking into making our own app, right? We're just looking to be like an all-in-one platform that's beginner friendly. And that also offers advanced education, right? We have a bunch of analysts that day trade full time. We definitely know what we're doing, right? We were all trading full time before this. Now we're just looking to help others. And not at a premium. It's only $50 a month compared to some people charging $350 a month for just alerts. It makes no sense. Makes no sense to me, but you know, everyone has their own opinion, and that's fair. Okay, sorry for the rant, but it is facts. Yeah, $1,000 a month for alerts. I don't care how good you are. That's ridiculous. They're just scamming their people. We can easily bump up our fee to $250, $300 a month. And everyone would still pay it. But we're just not greedy like that. You know, even if like I don't care about giving alerts out, right? I do very well. Sorry, I'm reading comments and I'm getting off track. I don't need to do alerts, but you know, I do it because everyone wants me to. And everyone's always like, we want more alerts, more alerts, more alerts. Half the time of me trading during the day is me just sitting in my chair listening to music. I mean, like, you know, I'm very patient, and yep, exactly. So John said, I want the market to come to me. That's what I wait for. I have a setup. If the market doesn't come to me, I'm not going to trade it. I take a few trades a week and that's it. Some weeks I don't even trade. You don't need to take every good setup in the market. You don't. I like talking about this more than the charts because this will stick with you guys longer. Yeah, Harry Wang charges $4,000 a year. That is absurd. And you know, the people paying that can't afford $4,000 and they're paying it anyway. So he's just scamming his people. He's also only 21 years old. That's a whole nother conversation to save for another day. But this looks pretty good. Oracle. Right, stop loss would be right around that region. I was a commercial real estate broker before I traded full time. But when I was a broker, I would swing trade. I wouldn't day trade, but the market was favorable towards swing trading. So that definitely helped me make a lot of money. But then once I, you know, became better at trading, I pursued that full time. So just like any other side hustle, keep working your job until you make more money doing your side hustle than your main job. Right? You always want to be secure. Always be secure. Don't make stupid decisions. Anyone can reach the level, man. Anyone can reach this level. There is unlimited potential, but the thing is, you can't focus on making the money. You need to focus on making the best trades. Right? Focus on making the best trades, and money will come second with it. On that note, I'm gonna head out. I do have a lot to do. I move tomorrow, moving into a new apartment in the city. Very excited. So tomorrow I won't be very active, right? I'm moving, obviously, but the rest of the week I will be. Yeah, he wants 5,000 a year for 2 trades a week. That he says he's only going to hold 11 hours. Like, I don't want to badmouth anyone, but that is a total ripoff. Let's say he has 100 members, right? That's a lot of damn money. That's A lot of damn money. 500 or 100 members, and he's making 500,000 a year. That's ridiculous. So just take note of that. Be careful of who you take information from. Even me, right? Just any single person that you listen to online, just always take everything with a grain of salt. Right? I'm completely transparent. I don't care if you guys don't like me. I just try to educate as much as I can. But don't listen to every person you listen to 100%. Right? Make your own opinion on everyone based on your thoughts. And on that note, I think I'm going to head out. Hopefully you guys learned a lot. And I will see you this week. Let's kill it. Let's make some money. Let's make some good trades. Make sure you focus on the trades, not the money. All right, guys. Have a good one.